Hey guys, I'm going to just jump right into this video because I want to make sure that I am maximizing my time appropriately. I'm going to go ahead and set me a timer for 15 minutes. And I promise you, I'm going to try to adhere to that. And our 15 minutes will start right now. All right, so I'm starting a new episode on my channel just for my students and anybody that wants to learn this skill. And what I'm going to be teaching you is I'm going to teach you how to read the charts from the 1 hour time frame as well as the first 6 candles of the day breakout. Okay, so when I come to the market each and every day, this is the NASDAQ. The first thing that I want to ask myself is where are the buyers and where are the sellers? So when I come in the morning, come to my hourly time frame, here is where all I see in the market, okay? So let me just show you quickly how I like to label my charts. So this will be considered where the sellers are. So I want to make a zone there from the highest body, highest wick. Here's another area where the buyers were hanging out. However, this is more recent, so I want to go with this one. So I'm going to draw from the lowest body of that candlestick pattern, and I'm going to draw it all the way down. But this time I'm going to draw it here because we ended up having a breakout of this area. So I want to make sure that I mark the low of that breakout candle, okay? Now, this is something that you really won't see anywhere else. So I just want to show you this so that you will understand why I mark the candles that I mark. I also noticed this zone right here. This is where the sellers were hanging out. So let's go ahead on and put that in on there, color code that so that you can know where the sellers are. And that's really all that I have for that morning before the market starts. So I'm going to mark this area here as a nice little green zone because that's where my buyers were overtaking it. Okay, and then right here, my sellers. Now, slow this video down because it's going to go real fast. But once you get the hang of this, I promise you your trade will go off to another level. The sellers were hanging out here because why? The price pushed up, found resistance here, fell down. This was a buyer zone right here. This candle right here closed below that. And I also want to put a line here. This would indicate my breakout candle, okay? The breakout candle indicated right here means that price, it broke out of this price right here, okay? So now I go to my 5-minute time frame and I'm ready to trade for the day. All right, so first candle of the day was this huge red candle, purple candle, and then I got this combination right here. Now, I would not just get into the trade at this point. However, I want to wait till I have a break and close above there because this would be my setup candle right here. I have an inside bullish candle and I have a candle that has closed above the high. So this is what I like to call a 3-candle move. So a 3-candle move would have me entering into the trade right here at the high of this candle when this candle pulls down. Where would my exit be? Right here. My exit would be right here, or I can use the low of this swing low here, depending on how much money I have in my account and if my risk tolerance can take that, okay? That's it. Entering in here, I already know that I have this little zone up here that is bound to meet resistance because what was once support has been broken and now it is serving as resistance. So it would have been a reasonable entry to get out exit to get out of this area. Now, if you entered in here at, let's say, 24,405 and you wrote it all the way up to here, that was about 95 points. So almost a 100-point trade unless you stay all the way in for your full 100 points. With the volatility being as high as it is, it's very easy to get 100 points in the NASDAQ. You could have been done with your day. All right. Now, when we came up here, we got this resistance. Why? Because we're at a seller zone. And you can see the market created inverted hammer here. We started pulling down and then we pushed all the way back up. This is your signal that the buyers were no longer in control at this level, that there were still sellers there. And then we came down. Now look, notice where we found support at. We found support right here at the low of that breakout candle. So these black lines indicate where my breakout candle was. There you have it. Nice little buy. When you see this candle did not close below your line, you can enter in here, right here on your line. Your exit would be right here. There's a very small amount of money to risk. And again, you ride it right on back up here. Another 100-point move if you rode it all the way up there. We got a nice, strong, bearish candle here. Of course, you can enter in here and with the attempt to write it back down, but you would have gotten stopped out of that trade. Why? Because if you entered in here at 24,498, your exit would be here, right here at 24,541. Now, I generally teach to students who are new at this, so I only advise you to learn the process and use one micro contract. Do not worry about the money right now. Worry about the process. Just get the process down and the money will come. All right, here's another opportunity. You got an inverted hammer here. We pushed up here, could not take out this high, and down we came. Noticing how we're finding support right here at this area here. All right, we pushed right. We just pretty much ranged between this sell zone and this breakout low that we found on the 60-minute time frame. Every time we see a pull up and a landing right here with a candlestick formation, that gives us an entry opportunity. All right, we pull right back up into this area. Now, I don't know how many times you want to go back to the well, but personally, I would not be getting into trades 4 and 5 after it's been to a level 4 and 5 times. I like to get it on the first go round, maybe the second one, but definitely no more after that. But you do what you like. We came back down here, and this looks like some type of announcement that happened, but this is a beautiful setup. Again, once again, we got this bullish harami, which means that the small green candle can fit inside this purple candle. That is a strong bullish pattern. We got the second candle that closed above the high of this candle. So as this candle is coming down to the high of that candle, you can enter that trade. Where would your exit be? Either at the low here or the low of that candle. It doesn't matter. What if you would have caught this whole move here? Because it looks like it went pretty fast. I was not in the market. But notice where we are getting resistance at, right here at our areas of resistance off our 60-minute time frame. And I think I'm going to run out of time. So I'm going to make 2 videos. One video is going to be for the NASDAQ and the other video is going to be for the ES. So stay tuned for that as well. But I don't want these videos to be over 15 minutes long. I have a very short attention span and I don't want to be spending 30 minutes on a video, watching a video. All right. So at the end of the day, you can see came back down here to the top. Now, this is what I like to call the break and retest. Because once we break an area, we're expecting for it to come back down here, create some type of candlestick pattern, and take us up. How would you enter this trade if you saw this? You could either enter in at the high and risk the low, or you can enter in at the opening and risk the low. Either way, your exit is going to be the low. Okay? If you did that and you hung in there for 15 minutes after all of this mess here and just rolled it up to here, you would have done yourself fine. That's using the hourly measurements or the hourly levels, for those of you who like to use the hourly levels. Now I'm going to talk about the strategy that I like to use, which is the 9 a.m. high breakout. Now I call it the 9 a.m. high, but it's really the first 30-minute orb, the first 30-minute open range break. So you can see right here, we ended up getting, this would be our lowest body, lowest wick. our highest body, highest wick. This is our first 6 candles of the day. 1, 2, and follow the middle of my crosshairs. 3, 4, 5, 6. So this would be our 6th candle of the day, which means that this would be measure the first 30 minutes of the market's moving. All right. So if you did not have your 60 minutes line here and you didn't know you were in a bull zone, then of course you would have not taken this trade to the upside unless you felt comfortable with entering in the same way I showed you. Then that would have been fine. You could have done that. Notice when we get up here to our high, this is same principle. Sellers are here, buyers are here. So you can see the price just kept getting rejected. Now, I like how I had the 60-minute line there. You would not have had that line there. Only thing you would have is this support level here. You would only have this support level to guide you for your future trades. Look at how many times it caused support there. So these are great opportunities for you to take in the market. Now, this green line here is where I like to measure the candle that actually broke out. This is the setup that I use for the 9 a.m. breakout or the first 30-minute order breakout. I like for it to break out, give me some type of direction. We had that breakout candle right here. I want to measure the high and the low of that breakout candle. And actually, after this candle happened, when this candle pulls back down to this level, you can actually get in for an early entry to take it up to here, but you can see it did not come all the way back up there. It actually fell all the way back down, came back and retest this, made a slight reversal. Inverted hammer here, beautiful. It's very important that you understand and know your candlestick patterns, because candlestick patterns are like words on the page. If you're reading a book, you can't read a book with just blank pages. A book has words on it. These candlesticks are words. So learn your candlestick patterns. I have 4 that I use. One is the hammer. One is the bullish and bearish harami. One is the inverted hammer, which this would be an inverted hammer right here. And the engulfing pattern. This would be an engulfing pattern right here. This big purple candle. This would be a bullish harami candle or an inside bar. I also like to use the piercing pattern. I don't really see one here. And all I do is the opposite. So the opposite of a piercing pattern is a dark cloud over cover if you're selling. And I like to use the hammers. The opposite of a hammer is going to be an inverted hammer, which is right here. So a hammer would be just the opposite. Kind of looks like this. It would be a bearish harami, because this candle can fit on the inside of that candle, or this candle right here. This is a bearish harami. This is awesome. It does not matter what color the inverted hammer is. If it's inverted, it's an inverted hammer. And if it's on resistance, then it is considered bearish. All right. And that's pretty much it. You have plenty of opportunities today in the market to trade off of your 9 a.m. Or your first 30-minute order level. So I hope you were successful today. Leave your questions in the comments, and I'll see you on tomorrow. Bye-bye.